All right, so guys, I think we can start now. This is a good time to start. We have, I think the number is good now. Good morning once again. My name is Emmanuel Odogwu, reaching you for the beautiful city of Port Harcourt. It's a beautiful day here. Just finished drizzling. If you like rainy, I want to believe you also got the showers in your area. That shower is the shower of peace, the shower of blessings. So this is our morning market review from Rally Trade Rally Academy. So we do this every morning from 8 a.m. to 9 a.m. One solid hour of market analysis. So we try to give you tips and tricks, right? How to navigate the market profitably, navigating the market structures profitably, right? So we try to also give you previews, reviews of what the market has done so that you can always be profitable. So that being said, let's jump into the rocks of the matter now. So we're going to start with fundamental analysis, right? So let's look at some of the events that can affect our chart. Now, a little sound check here. I want to believe you can hear me. Guys, you can hear me, right? Okay, I want to believe so. Okay, I can see you there, Mr. Tunde. Thank you very much. All right then. So let me share my screen real quick, right? So I'm sharing my screen. So this is a Forex Factory. So let's just look at some of the fundamental events we have for yesterday. And yesterday we have a lot of red news, right? Now, but for today being Friday, the 21st of June, blessed year of the Lord 2024. So we have a GDP here, as you can see, retail sales by 7, and 7 has come and gone. So let me do a quick refresh there so that we can have the result there. So for today, it's almost like a World PMI day. It's actually a World PMI day, right? So that means so for that retail sales, I think the result came out good, yeah, right? As you can see. The result came out good, right? So that means GDP must have strengthened a little bit. Yesterday there was a sell-off on GDP, so it must have strengthened a little bit. And of course, that strength did not really last because of the sell-off of yesterday. So for today, we're having PMI, right? That's Purchasing Managers Index, right? So we're having the flash. So we have two variety of them. We have the flash and the final. So the flash normally comes out first before the final. So I think 2 weeks apart. So the flash takes most of the impact, right? So this is manufacturing and the service industry, right? And that's in the in Europe there, right? So we have the French, we have PMI by 8:15. Then we also have by 8:30 we have that from Germany, right? Then also by 9:30 we have from the UK. Then by 2:45 we have that from the US. So it's a World PMI day, right? That's Purchasing Manager. So simply put, the value we expect in the actual, right? So as a rule of thumb, if the value, the actual is greater than the forecast here, right? Or actually, if it is above 50, right? It seems to be good for that particular industry, either the service industry or the manufacturing industry. Okay, so good for that industry means generally good for the domestic economy or good for the domestic currency, right? So that means that would be bullish for that particular currency. Otherwise, it's going to be bearish. So that's how it works, right? But PMI doesn't move as much as your your CPI and your NFP, right? So you may still want to trade it, right? So if you have your trade already running, so you may want to have stop loss and of course take profits on your trade, right? Most persons trade without putting stop loss. Stop loss is risk mitigate, risk management. Trading without stop loss means trading without risk management, right? Probably you have a mental stop loss, right? That means you have a place in your head that if the price goes against you, you now close it. But let me assure you that that one doesn't always work, right? Because we're emotional beings, right? We're emotional beings. And that emotion, you'll be using it against you. Instead of you to use emotion in your favor, you'll be using the emotion against you. Because once you get to that value you have in mind, something will tell you it will still turn back, it will still turn, it will still reduce. And then before you know, instead of you to cut short the losses, which is our mantra here, cut short the losses, allow the winning trade to run. So quickly, you may want to write it down. If you're hearing this for the first time, that's the mantra here. For every winner, everybody that wants to, please, when I say winner, I mean you are a winner in trading, okay? So for everybody that wants to make profit trading, right? So one of their mantras should be cut short the losses. So quickly write it down and paste it in one area of your room, right? I'll be looking at it, right? It's called silent seminar. Be looking at it. It's called cut short the losses and allow the winning trade to run. Now, if you look at your trade history very well, you will discover that you have been doing the direct opposite of it. So let me give you that little task. After now, check your trade history. You discover that you have been doing the direct opposite of it, right? So you have been allowing the losses to run, and you have been actually be cutting short the profit. Direct opposite. So if you want to, if you like, you can change and do the direct opposite. Then of course, it will turn for you. Okay. All right then. So let's jump in and see what we have here. So the way I normally like to trade news, okay, it's already 1 minute to the news. The way I normally like to trade news, what I do is I do a buy stop and a sell stop, right? Buy stop and a sell stop. So what you want to do is on your chart. Okay, the time of the news is already out. Let me share my screen on your chart. So what you want to do is you just do a buy stop and a sell stop. So let me share the screen real quick and let's see what must have happened to where is zero here. So this is zero. So as you can see, so this is the dive downward, right? So that is just 1 minute, right? So and this is a 15 minutes candlestick. So that means the move was just from here to here, right? As you can see. So let's measure the distance it actually moved. So that is somewhere around let's drop down to 1 minute time frame. So 1 minute time frame will tell us their actual move, right? Because it's just 8:15 right now. So that means the distance or the move was just from here down here, and that's around 15, 14 pips, right? Did not really move much, right? 14 pips. And if you watch it as retrace almost half of it, right? So 14 pips. So if you were to use the straddle method, buy stop and sell stop, probably you would have given a safe gap or a safe distance. I hope you guys can hear me. You would have given a safe distance from the market price to your buy stop, and that safe gap would have been nothing less than 10 pips, right? Nothing less than 10 pips, or let's say 7 pips. So the profit would have still be very, very small, right? All right, so but then let's look at the result, right? So this actually moved down. So let me share my screen again. So let me go back to Forex Factory. So as you can see, it came out bad, right? That is red, right? It came out bad for you, as you can see, right? So that is why Euro USD actually went south. South, I mean, it went down, right? So this is actually a vote for the dollar, right? That the dollar is because if the base currency euro is getting weaker by the news, that means the dollar gaining more strength. That is why it went down, right? So that is the interpretation of what just happened right now. Okay. All right, guys. So by 8:30 again, we're having another PMI, right? So that's from Germany right now. So we just had the one from France. I hope you guys are getting value and you can hear me. So I think that's for today, right? So let me jump in quick and let's look at technical analysis. So the type of technical analysis I do is called, okay, Modesta. Modesta is raising up and Modesta, you can ask your question. We don't have much time. We have not even started. So Modesta, you can throw your question on the chat. You can drop your question, then I'll take it. Okay, just drop your question, then I'll take it. Now, the type of technical analysis I do is market structure analysis, right? So we look at the market structure, then we'll try to look at what the
See, you
interpretation
boys
of
in
the
this school,
market or what the
I'll
market
start
is telling
beating
you.
you.
So if you're
That your
looking
boys
at the
toilet is
market structure,
always
it's like
smelling.
you're looking at the
So me, I'll
architectural
be cleaning
plan,
it for.
right? Right? That means the architectural movement. Pardon me to use that word. So the blueprint of the market, that's the word. The blueprint of the market, right? Okay, let me mute. So I've been able to meet everybody right now. So let's continue. Thank you for saying that. All right, sorry about that. Let's continue. So let me share my screen. Let's do this fast because once it is 9, we are actually shutting that. So we have to take advantage of that. Okay. So I've been able to share my screen. You guys can see my screen. I believe so, right? So let me know. Just type chat if you can see my screen. All right. Type chat, please, if you can see my screen. Have you typed the chat? All right, guys, you can see my screen, right? Okay, fine. So let me start from USD index. Thank you. Appreciate the response here. Thank you. All right. So all of these lines, I do these lines. I think that was last week, right? So we have actually discussed all of these things, right? And we said USD index is actually shifting, right? So we call that a market structure shift, right? So where were we? We were on a downward trend. That's for those of us just joining us, right? We were on a downward trend. By that I mean we were rocking the market going lower. I mean we're destroying the lows. The market was trading lower. So I've mute again, okay? Sorry about that. So we were just destroying the lows, right, on the USD index. That means USD was suffering. But we said last time that look at this high. This high was the high that has to be taken out, right? And then we saw that the market put up a low, right? So for this high to be able to trade lower than this low, it means that we're going lower. It means that we're going lower, right? Then suddenly we saw that from that low, we're able to trade above this high. From that low, we're able to trade higher. So we traded higher than this high, right? So the last time we said after trading higher than this high, we call that a break of structure, right? If you can remember. So break of structure. So whenever we trade higher than the previous high or trade lower than the previous low, we call that break of structure. So you're familiar with that term now. So after that, then we had a retracement downward, right? So that is offering the market some discount, right? Offering discount to the market. And what do I mean by discount? By discount, if you use your Fibonacci and you draw from the entire leg, right? So you draw from the low to the high. Once the market trade below 50%, this is 50%, we call that a discount. So the market offered a discount, and discount is very, very attractive to buyers. So more buying pressure was attracted. So actually, our target right now is to trade above this high, right? So the market achieved a particular feat by trading above the highs and above the lows. So our target right now is to trade above the high. Thank goodness the market has already put up what we call rare ROEH, relatively equal highs. So the market has given us relatively equal highs, as you can see, and relatively equal highs is actually a liquidity pool. What I mean, a trap of liquidity, right? Very relatively equal here, right? So that means our target on USD index, are you guys following me? So let me just believe so. Our target now, this same line was drawn like I draw this line last time, right? so so our target is to trade above this high. So actually we are actually going there, as you can see. Going there, trading above this high is trend for the dollar. And we're already seeing this trend for the dollar displaying across the currency pairs, right? We are already seeing this trend for the dollar displaying across. So, Modesta, I think you finally dropped your question. That's what I was expecting. Say you're having a problem with knowing your entry price. Wow. Wow. Just wow. How is that so? And you're already trading on your real account and you don't know your entry price. Okay. Now, in this ministration, salvation has finally come to you. You know your entry price. Okay, so market would always pick your pending order. Now, see, I want to believe you attended training, right? You attended our CFTP. So perhaps you attended it in maybe any of the outstation, right? Or or any place where we have a physical office. So I think instead of that, not to take our time, I will just drop my number, Modesta. For you particularly, you will call me, then I will explain how you can see your entry price. Okay. So I want to believe you're using either a phone or a laptop. So for that not to take our time. Okay. So sorry about your loss of 10K. I want to believe that was the stop loss, right? So let me continue. So somebody is already asking another question. How do you verify support and resistance? So we are just going to be taking only question, and they will not even learn. All right. Let me answer your question, then I will continue. I say, how do you verify support and resistance? Okay. So please, a verified support is the support that is uh, a level that is able to trade above a high is a verified support. Very simple, right? So if this low now, look here, please. If this low, right, is responsible for trading above this high, this becomes our verified support. As simple as that, right? But you notice this market picked up from this low and then it has not been able to trade above this high. If today, right, and this price trade above this high, then automatically this level is a verified support, right? Now, all of the lows and highs are support and resistance, but the verified one, a strong one, is the one, a strong low or a strong high is the one that is responsible for causing a break of structure. All right, please, you understand that? So, from everything I've been doing here, it means USD is strong. That's the meaning, right? And but then it has something to achieve. It has to trade above this high. So we are done with USD index. Let me run fast. So GP USD real quick. So we saw GP USD the last time, right? And then I was able to draw this on our chart, right? And then remember we do all of this low and we call them strong lows, strong lows, strong lows, strong lows. So the market keep trading and destroying the highs. We call that target liquidity. So the market keep going for the target liquidity plays. This is H4 time frame. The market keep going for the target liquidity, target liquidity. So that means we're on the upward trend, and it was respecting the lows. Respecting the lows, we call that protected liquidity. Then suddenly the market was able to crush our target liquidity, our protected liquidity. So this particular area, let me zoom in so that it becomes bigger, right? For phone users. So this particular area, this one, okay, I have to change the color. So this particular area was the protected liquidity that we crush, right? So for the fact that GPUSD on the H4 time frame, that's a higher time frame for most retail traders, have traded below this low, it means we are now officially on a downward trend on the H4 time frame. That means even the much lower time frame should still follow suit, right? Should be on the downward trend, right? So I remember trading below the lows is what we call break of structure. So since we have broken structure, the market will have to retrace. Retrace for what? Retrace to offer premium prices. Premium prices are high prices. Okay, so we retrace a little bit. Now, after retracing, guess what? These lows become our target liquidity. Let me ask you, have we crushed this low? So let me ask you now, please, have we crushed this low? Yes or no? That's for those that are following my analysis this morning. So yes or no, please, have we crushed this low? So I can see all of you there. Amarachi Modesta say no, right? So actually, we have actually the market has tapped now by caution. I mean, has it tapped or has it traded below this low? The answer is yes, right? I'm not asking you if we are having a fake breakout. No, no, I'm just asking if we have traded below this low, and the answer is yes. So we have traded below that low, and we can still go further, right? So because so now the new the way the chart will look like, the market structure will look like. Now, having traded below this low, right? So we may want to still trade a little bit lower because US is strong right now. Then, of course, after some time, do not do a retracement again. Okay, so see, if you understand trading like this, and trading becomes easy for most persons. Trading is hard, right? But don't be following the noise. See now, just look at what I have on my chart. Is trading not easy like this? Eh? Just look at what I have on my chart. It's still not easy like this. This is upward trend, right? So we got a failure swing here and a market structure shift here, and now it is giving us a downward trend. It's not easy like this. If you trade like this, you have destroyed all of the noise that is causing confusion. Some people just think they can just come and pick money on the floor on this market. No, just learn this thing, and of course, you have set yourself. Somebody say it's not easy, sir. Oh goodness. Okay. Okay. It depends on the level of knowledge, right? Okay. Okay. Now, see, all right, all right. I appreciate your response. Okay. So trading is hard. Now, see what I'm talking about, eh? Being able to identify what the market is doing. Don't just rush in, buy or sell. No, we don't do that here. What is the market doing right now? We call that directional bias, right? So, what is your directional bias? What's the market doing right now? So, we have shifted from the upward trend. We are now on the downward trend. So that means most of your trades or most of your direction will be to be trading downward. I mean to be selling. You can see that. Now, if you do this on the higher time frame or H4 time frame, so if you drop down to a lower time frame, you'll be looking for opportunities to sell. And that makes it easy, right? That makes it easy. You look for opportunities to sell. So look here now. Observe this carefully. Now, since we have traded below this low, so any other movement downward will be now. See, take note of what I am saying, right? Listen closely. Since we have, do you know that you can only be trading one pair and be making more money? And it is new traders that are jumping from here and here, or you can be trading two or three pairs. If you understand it, you just be trading. Now watch you, we have traded below this low. We call that break of structure. So anytime there is break of structure, the market may still continue a little bit. We call that extension. Right, so the market may extend a little bit, right? So that's where Fibonacci extension comes in. May extend a little bit, but all of that extension, right, is high risk trading, not low risk trading, right? So if you're selling at the premium price, that is low risk trading. If you're selling below the premium price, so that is high risk trading. And you can still trade it, but you should know it's high risk trading, right? So since we have traded below this low, which is our target liquidity, so the market may still trade a little bit lower more, right? Because this is just beginning of the day. Then afterwards, it will do a retracement and start going. Now, this is H4 time frame. They will drop down to a much lower time frame. That will be 15 minutes time frame, guys. So that will be 15 minutes time frame. So let me look at the questions again. So you are saying, aren't we to buy when the trend is low? I don't know what you mean by that. So let me try and meet everybody again. Some persons are just funny. You just join the an online meeting, and then you are just on your television for us to hear. Hi, God. All right, please. Sorry, let me apologize on behalf of that person. So let's continue. Okay. Sorry about that. So your question is, aren't we supposed to buy when the trend is low? Now, what do you mean by the trend is low? So all the movements we have, they all have names, right? They all have names. So if we are on the when you say low, you mean downward trend or upward trend. I don't understand what you mean, right? So if we're having a downward trend, then you should be selling. Where do you say you sell at the resistance? If we are having an upward trend, then you have to be buying. Where do you buy? You buy on the support, right? Now, I want to believe you are talking about on a downward trend, right? Then, of course, after we have broken structures to the downside, that retracement going upward, right? That little movement opposite the direction of the trend. You can buy them, but that would be a high risk trade, right? So I think I've been able to explain that to you. So I think for most persons, you will need to learn trading again. Of course, that is what we're doing right here. So if you watch carefully, you will notice this 15 minutes time frame, we're actually breaking structures to the downside, right? So we are trading below the lows. So let me draw it for you so that it make it easier for you. So this traded lower than this low to form a new low. Then of course it retraced higher. It was careful enough not to trade higher than this high. I've explained that severally. So that means we now have what we call a protected liquidity somewhere here. So that means the market should not trade above this high. But then we're having a target liquidity below this low. So that means while we are here, our target is to crush this low. Why? The reason is on the higher time frame is on the downward trend. So if you sell here, it take this low to form a new low. Now from there, we have traded below this low. That's break of structure to the downside. So the market will need to offer a little retracement. Retracement is so that more traders can come in with a sell, and traders will not sell except the market gives them or offer them premium price. So the market offer them premium price. So this is the premium price. You notice why this market was going upward. It was careful enough not to trade above this high. So that means this high becomes our next protected high, if you like, protected liquidity. I hope these grammars are not confusing you. So then this new low that we formed here becomes our next target low. Guess what, sir? Have we crushed that low? The answer is yes. So the market has crushed this low to form a new low. If you understand, if you follow trading like this, sir, trading is easy. But then it will take a lot of knowing, right? A lot of knowledge and a lot of practice. Now we have crushed this low. Guess what, sir? You can guess. Anytime we crush a low, the market is free to retrace. So that means anytime from now we can retrace. But if the momentum is much stronger, the market can still go downward. You must not trade at every second. What do you do, sir? Two things you can do here. Take note. Take note of what I'm about to say. Two things you can do here. So if you understand this one, you can now copy and duplicate it across all the instruments. Trading is not haphazardly. It is done in a particular way. See, watch me, sir. If I use my Fibonacci and this is the leg, right? So if I draw from here, or even without using Fibonacci, if you divide this particular leg from here to here into two, I want to believe this will be the division, right? So if you divide it into two, that's 50% now, right? So this whole leg you're seeing, if you divide it into two, right? So if you are trading above here, that is premium prices, right? Or higher prices. So that means you are to be selling. Can you also sell below this leg? The answer is also yes. Now selling above here is called low risk sell. Selling below here is called high risk sell. You just need to understand it this way and make trading very simple for you. Now, what do I mean by low risk and high risk? Now, low risk because now we are on the downward trend, so there is higher probability that the market will go down. High risk trade selling here is because we have broken structure, so the market may retrace at any time. Come on, That makes trading easy. Now, how do you confirm this? Look at the past, right? No, we live life forward, but life can only be understood backward, right? Life can only be lived forward, but we understood you can understand life very well backward. The same thing with chart. We trade forward, but you can understand the charts backward. Understanding the chart backward means look towards your left. Just turn your eyes and look, right? Look. So if turn your eyes towards the left, what has the market done? So the market have showed you what it's the market has printed for you its character and characteristics. What is that? Look at it here now, right? I don't know whether you guys are following me or I am just talking. I want to believe you guys are getting value, right? So this is the pattern the market has been coming. Why? Because on the H4 time frame, we have broken structures to the downside, right? We are driving downward, right? So what can you do? Do you want to take a high risk trade or a low risk trade? Now, for most Nigerians, or my advice is thank you very much. I think I've seen one person that appreciates it. Okay, I don't know where the network is. Oh God. Please, can you guys still hear me? Hello, traders. Those of us just joining us, this is our money market review. Okay, I think there was a network. Hello, traders. Those of us just joining us, this is our money market review, right? MMR. My name is Emmanuel Odogwu. If you like Odogwu of course, you will not be wrong. All right, guys. Those of us just joining us, sorry, there was a little network issue there. So let me try and share my screen again. Are you guys still here? Stay with me to the end. At the end, you will you get more understanding. All right, guys. Let me know if you guys are still with me. Okay, we are following you, please. So let's stay on technical analysis first, okay? Let me take question on what I'm doing first before you ask one question that will take us somewhere else. So, so you're asking what is the name of this strategy? So this is simply market structure, sir. So this is market structure. Now every other strategy rides on market structure. Every other strategy rides on market structure. Even if you have any other indicator, right, software, they all drive on market structure. So market structure is actually the 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 language of financial market. Come on, I was looking for that word. The language of financial market, right? So we are breaking structure to the downside, so we need a little retracement. So that retracement may just lead us to this low, right? So that retracement may lead us to the open price of the day, right? So that means anywhere around here we may want to start selling. So that will still be a low risk trading, right? So we will need to see a little retracement to the upside. So guys, we will need to see a little retracement to the upside. So that retracement towards this area, then we can start doing our selling, okay? So I know you want to sell. Why not? So we may need a little retracement to the upside. Then from there, we can now continue to do our. All right, guys, I think you understand that. So a little retracement inside this area, then we can start selling, okay? Now let me leave GBP USD and do Euro USD very fast. So Euro USD real quick. Where is my Euro USD now? So the same thing is happening to Euro USD, guys. So start using stop loss, please. Start using stop loss. So, sir, you are saying if structure has been broken either to the downside or upside, the best thing to do is to wait for an indication for a retracement. If your answer is yes, what are those signs of retracement? Signs of retracement is very visible to the eyes. Now you see the market start retracing, right? Or you get a change of character if you understand what change of character is. But if you don't understand change of character, you will see the market start visibly retracing. So if you see the market start visibly retracing, then of course you can so Euro USD right now, let's do one quickly. So H4 time frame, So this one is visible to the eyes, right? Very clear. Now, as you can see, this one, we have broken structure to the downside. How do I mean? So watch here, H4 time frame. This is our low. Remember that low. Once we trade below the low, right? So we are going downward. Of course, we have already traded below this low, so we're already going downward. So this is the target point, and we have crushed that one. Then, of course, the next time it reaches. So once the price is here, you already know that you're on a downward trend, right? So take note, sir. This is another low again, and it gave us this high. So that means this low becomes our target low, if you like, our target liquidity. So that means you should be targeting this low. Once you know that you are on a downward trend, you'll be targeting the lows, right? So okay, so this is our target low. So for today, this market would crush this low. To crush this low, right? So that means so we got a retracement from here to the downside, right? So we are targeting this low, right? So that means we might trade below this low. It's already showing us that to look something like this. Remember, once we trade below this low, what is it called? Let me get your answer. Yes, retracement is the same thing as market pullback. So let me ask you, once we trade below this low, what is this called? BOS. Thank you very much, guys. It means you're following me. There is a weakness here. So once trade below this low, we have a broken structure to the downside. Breaking of structures to the downside is what we call trading below the last low. Don't allow big grammar to confuse you. So breaking of structure to the downside, right, is a sign that we are still on a downward trend, sir. And if we are still on a downward trend, if we have broken structure to the downside, we expect a little retracement again. Now, this is how the market moves, right? It makes it very easy for you to trade and, of course, make profit for yourself. So we are on a downward trend. That's the meaning, right? So if we move down to a much lower time frame, that would be 15 minutes time frame, right? So come on, we saw a gap here, a gap downward. That gap is actually a show of pressure to the downside, right? So the market cannot even move. It started gapping. So if you look at this carefully, you will notice this is our last low we saw, and the market has been able to destroy that low, right? So the market has been able to destroy that low. So one thing you should know as a trader is you should know when you're taking a high risk trade and a low risk trade. As simple as that, sir. So how can that guide you? If you're taking a high risk trade, then you reduce your lot size, right? Because it's a high risk trade. If you're taking a low risk trade, you increase your lot size. Just as simple as that. And how do you know a high risk now? By high risk, I mean high risk set, low risk set. High risk back, low risk back. Something like that, right? So see what I mean by that. Now, for the fact that once we trade below the low, remember we have tapped liquidity at the low side, right? Now, this market may still be going down further. If it has other levels of liquidity, it has to tap at the left-hand side. But for here, we are done. As in, we have destroyed this low, right? So that means we should have a retracement. Now, this market may still be going further. So that will not be because of that, you may now want to go to a higher time frame so that, okay, let's look towards the left hand side if we still have more lows to destroy. And do we have more lows to destroy? The answer is yes, right? So we have not actually not traded below this low. So that market, so that price may still go down more, right? Then just very simple analysis here. So 15 minutes time frame back to 15 minutes time frame, like what I did on the on GP USD, right? So this is the entire leg of the move, right? So this is the entire leg from here to here. Halfway around that leg, divide it into two. So we have your PD array, premium to discount array. So this is your premium prices and this is your discounted prices. Remember, if you want to sell, you should not sell at the discounted prices, right? So you may not put yourself on the right footing. But if you go ahead and sell it right here now, it's called a high risk trade. So what you may want to do is you may want to simply sell with a lower lot size, or you may want to wait for a retracement. Come on now. The market will offer you premium pricing. Now, this is exactly what happened here now. See, it traded below this low. It traded below this low. Come on, this is a relatively equal lows, right? Relatively equal low. So it traded below this low to form a new low, right? And then guess what? There is no need to sell here. If you start selling here, it's a high risk sell. Why? Because you have not waited for a retracement. So it retraced, right, midway into this particular leg, this leg, right? So let's look at it. Is it actually midway? So somewhere around midway, right? So if you divide this entire leg from here down to this point, what's the middle point? This is the middle point. So guess what? The retracement took cost to that middle point around that area. Then that's the best area. So that means it traded above the middle point. So that is your premium price, right? Once you divide this movement into two, half of it, the up is your premium. Are you guys learning? So once you divide it into two, the up is your premium, right? So it actually gave you a premium price. So this is the area to sell. The same thing here, sir. So the same thing here. So once you divide this leg into two, the half of it is your premium. Guess what? It is actually retracing now. So if you retrace inside this area, then this is where this is the best area to start doing your sales. So guys, you guys are following right now, isn't it? Don't deny me, oh, you are really following. Okay, thank you very much, Bamidele. I can see you there. So, so let me have your questions now. So, is it appropriate to set penny orders at the price you expect the retracement to get to? Wonderful. The answer is yes, sir. So, you can set your penny order around these areas, right? You can set your penny orders around this area. Ayanda, I can see the Oluwa Shegun, you're doing well. I can see you. So you can set your penny order, and that penny order around this premium area, right, would be a sell limit, right? So you can sell a sell limit. So a sell limit is used to sell at a premium price, right? Whereas a sell stop is used to sell at a discounted price. So you always want to sell at a premium price, okay? So premium I mean is high, okay? Remember premium or nothing. All right, so guys, I think we have done two. Let's look at gold quickly. I think somebody have asked for gold. Okay, gold, wonderful. I'm already. You see, the spirit is one. I'm already talking about gold, and you're already saying gold. So what about US 100? Wonderful. Oh yeah, wonderful, wonderful, wonderful. But we are once it's 9 o'clock, we are done. No? So gold, quick one. I think the last time I was here, we discussed gold. Most of you that usually join this morning market review, I want to really thank you very much because it's good for you to be joining so that you can get the market direction, right? You can get the market direction every day. Join us 8 a.m. Remember, we are also streaming this live on YouTube, right? So a lot of persons are watching this from YouTube. A lot of persons are watching this from YouTube. Yesterday I joined. I saw a lot of persons watching, following from YouTube, right? So don't just think this number you're seeing right here is the only number we have. A lot of persons are joining from YouTube, and we are also recording it on YouTube, right? So that means if you miss any session, right? If you miss any session, if you miss any session, you can quickly go back to YouTube and watch again. So the last time we were here, we do this. If you can remember, we said this is actually a mitigation block, right? No, we call it a breaker block, right? We call it a breaker block. So we say this actually a breaker block. Breaker block because we crossed this high. So the market traded up to trade above this high and quickly traded down to trade below this low. So the bearish candlestick, right? The last bearish candlestick is this one. So we actually drew this area. So the market retraced into that area, right? So the market retraced into that area. I think this was where we were the last time. So again, if you notice, it traded again inside this area, right? And of course, those of you that took the trade, so you notice inside this area, if you have placed a sell, you would have made this amount of profit, as you can see. Good movement to the downside, over the 250 pips. Good movement to the downside, as you can see, right? Then, of course, it came back to this area again, and of course, it now break the area and of course start trading upward. So we have actually escaped this area right now. So that's the analysis there. So if you watch carefully, you will notice this was the last high. This was the last high, right? That was responsible for trading below this low, right? So officially we're not downward. But right now we are seeing the market building internal structures for us, and those internal structures are actually trading upward. How do I mean by that? So the market gave us relatively equal highs. That will be a target for that will be a liquidity pool. And guess what? The next time it traded upward, it gave us this low, right? Then of course it traded to destroy that low, right? So that means there was some money here, there was some penny orders here, there were some stop losses here. So it traded to target those points and of course traded higher, right? So that means in internal structures, we are already going upward, but we still have this high to deal with, right? So internal structures, we are already going upward. Why? Because we have traded above this high. And trading above this high, we call that a break of structure. Break of structure is a sign, a show of momentum, right? So we have done that. Oh, come on, then the market should be able to give us a little retracement, right? So dollar is strong, as you can see, gold is also showing us some strength. So that correlation is not 100% correlation, right? So sometimes it exists, sometimes gold will just be having its way, right? So we are expecting a little retracement to the downside, right? So because we are breaking structure to the upside. So if you continue buying here, that will be a high risk trade, right? And you can take high risk trade though. It's your money now. You can take you can take high risk trade, right? But then we need a little retracement. Most traders that I have seen by my privileged position, right, talking with traders, dealing with traders, most traders that I've seen, the money that they are trading with, they should be trading low risk trade, not high risk trade. Somebody is trading, and of course, inside that money, school fees is there, house rent is there, feeding is there. Come on, in that kind of trade, with that kind of amount, sir, you should be trading low risk trade, right? Your trade should be low risk trade, not a high risk trade. Okay. All right. Let me take some of the questions here. So after Modesta, I can see you there. You say it's not our money. So after retracement, how can we confirm that the price is ready to resume its journey? Wonderful. I like that question. Right? So now it simply means if you're waiting for retracement, let me go back to that Euro USD and explain it. Right? Um, Okay, fine. So your question is after a retracement, how can we confirm that the market is about to resume its downward movement? So, sir, now let's use this one that has happened before. Remember, we leave forward, we understood backward, right? Now, that is what technical analysis is about. Now, remember our definition because without definition, there will be deviations. What's the definition of technical analysis? Analysis of the past, analysis of the left hand side of the chart, right? So let's look at this one that has happened already, whether we can learn something from it. As simple as that, sir. So usually you may want to wait for the market to trade above 50% of the impulsive leg. So this leg is called an impulsive move to the downside. This was a move that was responsible for trade. Now I'm trying to answer you, Wasiu. So this was a move that was responsible for trading below this low. So this high is a strong high, right? That the market must not trade above. If not, if market trade above this high, it means the market is now shifting to the upside. Fine, beautiful. Now this entire leg is an impulsive leg, right? Impulsive move to the downside. Now, if you take half of it, Fibonacci can give you that. If you measure from here to here, half of it. So this line, this is my green line, is almost like half of it, right? Wonderful. So if you take half of it, if the market trade above half of it, already the market has already entered a premium area. Inside that premium area, what do you do next? Inside that premium area, you start looking out for signs of the market turning. You don't just jump in at the premium area. You start looking at signs of the market turning towards the downside. And what are those signs? Those signs are called change of character. If I start explaining change of character, I think that will take us another time again. Are you guys still with me? So that's called change of character. Change of character simply means this upward movement means the market is trading above the highs, only above the highs, not below the lows. That change of character means for the first time the market will start trading below the lows, and you can see that on a much lower time frame. So we are on a 15 minutes time frame. So I mean, even if you drop down to 1 minute time frame, you will see that happening here. That being said, look here, just midway of this our impulsive leg, you can see a high. That this high, don't you think internal liquidity will be trapped up here? So if you watch, the market actually took out that internal liquidity, right? So the market has achieved something while trying to go to premium price. So that alone, that also being said, you can start selling. Also, if you look carefully, you can see there is a bearish engulfing here, right? So by candlestick maths, I mean by joining two candlesticks together. So if you join this candlestick and this candlestick together, so they have already engulfed this bullish candlestick. Already time to start selling. Come on. So I hope you understand that. That is bearish engulfing. Okay. So you need previous videos from the beginning. Okay, just go to our YouTube channel, right? Go to our YouTube channel, or you can chat me up too. I have some other videos that I can give you. Okay, I will drop my number. Okay, guys. Also, I think that explanation is will serve, right? So that means after this retracement into this area becomes our area of interest. So after this retracement into this area becomes our area of interest, AOI. So inside this area, right? So we will now start looking at for the market start trading lower again. I mean, breaking structures to the downside, right? Okay, guys. Let me do. Should we do US 100? Okay, we're on gold. We did not finish gold though. So we said gold is going to do a retracement to the downside a little bit, right? Before pumping upward again. So something like this. So most of you don't really follow up these drawings, right? And of course, these drawings we normally do, they do work out very well, except you don't have faith in the in the analysis. You should have faith. You should believe in us. Believe in us. Believe in our analysis. So when we analyze like this, you can just maybe take a screenshot or snap it. Much later, you come back and check. Is it this thing that was analyzed? Did it happen like that? What happened? That's how you are building yourself. You are learning. You're developing yourself. Personal development. That's where the profit comes in, when you develop yourself personally, right? Personal development. Remember, your income in this industry will not far exceed your personal development. You develop yourself how? You take some of these screenshots, you go back and go back to the video again and watch, right? Now that it has happened, what really happened? Did it start from the low risk trade? If I have taken a low risk trade, would I have made profit? If I have waited or I was not patient enough and then I took the high risk trade, would I have made profit? Something like that. So I normally show you where you can take low risk trade, where you can take a high risk trade, and I'll always advise wait for the low risk, right? You wait. So since you have broken structure to the upside, right? So these are called extensions to the upside, right? So there will be need for a retracement. There will be need. Now, why need? Need because we are trading upward internally. We are trading upward, so there will be need for a little retracement, such that the market will offer uh, discounted price. So those discounted price is what we will need, right? So the market will need to trade lower a little bit. So if this market start trading lower, remember this H4 time frame. If this market start trading lower a little bit, if you go down to a lower time frame like 5 minutes or even 15 minutes, you will see a downward trend, right? Now, but once we have break of structure to the upside, I mean the market now turn, then of course that is a sign that it wants to now start going upward. So there will be need for retracement. What if this market did not retrace and stay pump upward? I will not enter. I'll wait for retracement. Can you trade the retracement? Why not? If it drop down to 15 minutes time frame. So if you watch, what we do, we look at H4 time frame. They will also drop down to 15 minutes time frame. That's called top down analysis, right? So if you watch what is happening on this 15 minutes time frame, we can see that the market has printed for us relatively equal high. So we call that a rare ROEH, right? So the market has printed for us. This is the first high, second high, third high, the fourth high, right? So liquidity will be trapped around that area. So the market will most likely go back to crush that area. Take note, sir. But I wouldn't want to buy here. So it's showing clearly now that you should not buy. This is one challenge with most traders. The thing showing that don't buy, but they will still go and buy. And after they will not say, I made loss. Oh. It's showing clearly that don't buy. So what should I do? You wait, sir. You wait. What are we waiting for? We are waiting for a retracement. Remember, we do this right on the higher time frame. Waiting for a retracement. So the market has been able to bid for us a low, right? So watch this. So this is the low the market printed for us, right? Then of course it traded higher again, right? So if you want this high, it traded again, even traded above this high a little bit, right? So and then the next time it came down, it printed for us a much lower low, right? So that's a sign that this market may want to start going downward. I'm telling you. So and then it retraced. This retracement is almost 100% retracement. So I wouldn't want to enter a sell from up here, right? So a retracement should not be 100%. So it has already done 100% of the impulsive move. So I would want to see the market breaking this low again. The market should break this low again. Then it means if you want to trade that retracement to the downside, any further movement upward, movement towards this low, right? Then you now start selling from here because you want to trade the retracement that will take us down to this area again. But take note, this is upward trend. So that means if we come down here, the next high will be to smash these highs. The next movement will be to smash these highs and then continue trading upward. Very simple analysis. So that means what you do now, you wait. You wait for the market to trade below this low, sir. So that's a sign that the retracement is actually occurring. Or otherwise, it will smash these highs, and of course, we need retracement. Even if it's not smash high, I will still not buy, right? Because we need a retracement. So, guys, I think you understand that very well. You guys follow through. Thank you very much. So let me drop my number. It's already past 9. So 09026264507. Please, this is official line, so you may want to call during official hours. Then, of course, my name is Emmanuel. Emmanuel Odogwu. So please, you may want to chat me up, okay? I prefer chatting. What if you want to call? No problem, you can still call. Thank you very much, guys. This is Friday. May the market be with you. Bye for now. Join us again on Monday for another exciting session.